Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No one is paying attention. It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Alright, so hi guys, welcome back to the Greedy Trader channel. I haven't actually done one of these in a while, so it's good to be doing another one of these kind of videos covering specifically market profile. So for those of you guys who don't know what we do here on the channel, we talk about all things market profile. I have recently started a live stream that I do Monday to Thursday, and it's a live stream. Sadly, I don't have the market profile up as a graphic visualization, largely because the whole idea about the stream was to kind of show people how difficult it can be for you to be a day trader, right? A lot of people, I get a lot of questions, especially in my Discord server, by the way, the link is there, asking about, you know, day trading or trying to pass prop firm evaluation tests, whatever it is these days, and I get like a ton of questions. So I wanted to do something because from a professional standpoint, as someone who's been in the market for years, we all understand how hard it can be to be a day trader. So in fact, in my opinion, some assets are just almost incredibly difficult to day trade, right? And that's just because of the nature of that specific market or asset class. What you tend to find a lot is people day trading equities, right? And that's because the volatility in stocks is huge, and you've got all this massive pump and dump stuff, mispricing, inefficiencies. So if you trade the small cap world, for example, in equities, you will find that there's a lot of mispricing, right? A lot of pump and dumping. So, you know, these stocks go parabolic and people move in to short them. Sometimes they get squeezed out. Sometimes the whole thing tanks, right? So that is the game, right? There's some risk on that. And then you've got the group of equity traders that find a little bit more consistency, trading highly liquid and blue chip stuff. So Apple, and it's something I like to do myself. So in the US session, you will find me trading equities, right? So things like Apple, Tesla, some of the blue chip guys, and that's because they're almost always guaranteed to move all the time, highly predictable. Sometimes it has a high correlation to the S&P 500, which is one of the reasons why it's attractive to me as someone who's been in the business and has had a huge focus on these kind of blue chip companies. I have a massive background in equity research, so naturally I'm going to be drawn to this, right? But then on the flip side of the fence, the slightly newer traders, similar to what happened for penny stocks, came into this business looking for momentum-based stocks, those kind of pump and dump stocks that you find in the small cap world. Now that's not everyone's forte, right? So you find a lot of day traders in this space. Recently, with the explosion of trading stock trading apps, a lot more people are on these kind of apps on their phones. So there is a lot of movement when it comes to options trading, right? So we've seen a lot of this explosion. So there are a lot of people buying options, you know, as a speculative instrument. One of the things you guys will also know, being on this channel, is that I sell option premium, right? So again, I take the other side of a lot of these trades, and I do put a lot of my own option sales on my Discord server, so it's actually out there for everyone to see. But one of the things that I focus on is selling premium, because again, for me, I look at premium selling as being high probability. Essentially, you go in, you take the other side of the trade, you carry the risk of the stock. I prefer to operate on the put side as opposed to the call side, even though a lot of folks will say that it's definitely more more efficient to sell calls. I prefer to sell puts because again, I like to minimize my risk as well. Again, it's a good way to enter into a stock that you might have wanted to hold, because I focus on highly liquid options. So I might be selling premiums in something that I actually wouldn't mind owning, and that means that I can do those out of the monies, and even if they go in the money at some point and I have to get assigned, then that's okay. I'm happy to own the stock, right? So again, it's just about being efficient in the market and knowing what you do. But because of the explosion that we've seen in the options market, it has fueled a lot of the idea as well of day trading, right? Because a lot of people are day trading these things like SPY options, for example. It's huge now. In a bear market, the index tends to have a lot of volatility, so obviously everyone is buying calls and puts, right? So again, there's been, in my opinion, I just think there's just been an unusual explosion in speculative activity, and that has led to people believing they can achieve things that probably not very realistic. So one of the things that we do here on the channel and on the Discord server is make trading real, right? So we essentially make it realistic. So I always say to traders, trade small, trade as much as you can, so you get the experience, but trade small, because what that allows you to do is, it's really funny. People never think of it that way. Everyone thinks, well, I want to make 10k a month. You could, depending on how good you are, you could probably do that if you were trading small sizes. So as opposed to trade like maybe a 10 lot in currency, so a million notional, why not trade a standard? Or as opposed to trade a standard relative to capital, of course, why not trade a mini? What you find is that the wins, they stack up, right? You have less pressure, the wins stack up, you can take more high probability positions, because essentially you can accommodate the risk because you've position sized correctly. You're trading smaller, and that change alone can be very dramatic for people's trading, right? Because then you have more wins, higher probability trades, and as a result, the losses that would have created a kind of average now go down, so you have a higher batting average, right? So eventually you're going to have a higher return, right? So it's not really rocket science in that sense, right? So again, for these reasons, we have a specific approach to trading on this channel, and maybe we're not as big a channel as we could be because of this approach, because we're not necessarily doing all the things that YouTube requires you to do to become a big, massive YouTube channel, because that essentially would mean that we are going to change the way we do things, right? And we're going to have to show you stuff that is not true, it's not realistic, and then it doesn't work. So again, for those of you who do come and support the channel, even though we are a growing but small channel, I really appreciate it, because it just means that the YouTube algorithm knows that there's something useful here and there's something traders should know. And by just supporting the channel, you are giving people the opportunity to learn something that's practical, that's real, that's going to make sense for them in the long term. Okay, well, I'm going to jump into the video to avoid this becoming just a complete talk at you, because that's not the idea. But it's very important that we kind of got this out in the beginning, so if you're the first time you're visiting the channel, you kind of know why I'm doing this and why I'm here, right? And again, you can look at a ton of other videos I've done. We have a lot of videos from the live streaming stuff that I've started to do recently, which led to all this explanation, which is we're just trying to show day trading is difficult, and it's one of those things. You can succeed at it. We've done several days of live streaming now. Everyone gets the idea. So check it out. If you find it useful, hit that like button and then continue to subscribe and stay with us. All right. So moving on. All right. So today, what are we going to talk about? So I'm going to start with the S&P 500, because this is an interesting play, right? This is something that I'm short in right now, right? So it's worth talking about. So again, one of the things with market profile is you get this amazing visual graphic of what traders are doing. Now, if you don't have this, or you're not using this, or you're not doing anything with this, you got to think again, right? Because largely, it doesn't matter if you've got a candlestick chart up. When I live stream, I've got a candlestick chart. It doesn't matter. What matters is you are getting good information so you can execute on those charts. It's just a chart, it's your broker platform is an execution engine. It's just a chart. Forget about all the candlestick information you're getting. It's good information, but it's not sufficient. Now we're talking about, in some cases, intraday positioning, or we're talking about swing positioning. You need to be on the ball. Right, so take a look at what's going on with the S&P. One of the things that we can see historically is that we've built up, so we accumulated bids, and then we had this massive breakout on the daily profiles, and then we took out the offers here, and now we're trading above, and then we've got this reasonable bid stack here now that we've been bouncing off, and today we've made offers and we're going lower. Now, one of the reasons why I'm keeping the bearish view, as you guys will know, is that we've got a gap in value, and of course we've got an offer stack, right? And we know it's a strong offer stack because we got a lot of volume accompanying this specific offer stack. So I'm very keen to see that, see if we trade out the print and O period, which will be a clear sign that we're going to go lower. The profile will be a little bit extended. So if you're getting short late, for example, we got a bid stack here, so the chances of breaking 4279, 4272 is actually quite low. But again, if you're getting short here, you don't have a lot of wiggle room, and that's the problem with late shorts, is that you kind of have to preempt what the market is more likely to do. Now that said, we have a bid stack here, so we may well bounce off this and then go to fill the gap. If that happens, because we have an upside gap as well, if that happens, then we're probably going to do a value trade. So being sort of open to different possibilities and doing what I like to call an if-then scenario is pretty crucial. So anyway, that's our take on the S&P. So we'll see how things play out. So we take a look at gold. Again, this is really interesting for me. Definitely long this. We are value high, which means that we're going to probably start taking in some sell pressure, which is almost always the case. I think what we need to pay attention to at this stage is the bid stack that we have at the base, which is pretty much, for me, the support. So even if we do track back, remember we got value low, we got some real good statistical benchmarks, so there's some decent support all round. I think the concern becomes if we start to sort of cut underneath a period, which is the entire day's profile, then we're going to break down hard. And we got a huge gap, like massive gap, right? So at some point we'd expect this gap to be filled, but again, you can see that there was a strong interest in gold on the kickoff of the Middle Eastern affair. So realistically, if we can continue higher, for me, I would think sellers will get very interested into the offer stacks. We've got gaps of value to the upside quite a bit. So I think just out of trade location, most people would want to be long gold, and I think if you were attentive on when we started to build accumulation here and we had all this responsive buying, it would have been a smart play to at least position long with a tighter risk, maybe below value low, and that gives you a very good run if we did spark off. And initially, you're looking at a pretty decent swing trade after that, right? And if anything, I would have been a seller as the gap closed. Again, you can see that response there because we had a much lower close. So again, for me, the fact that we've recovered that and we're trading back to the highs shows there's really strong buying interest. So you're probably a little bit late if you're long now. You're going to have to cut those profits short. But again, it is what it is. If you didn't see it, you didn't see it. You can always forgo it and look for the sell side. But again, you run the risk of gold building into like a really big run, and then who knows, we could easily be trading up to the higher offer stacks, which is just above 1900 an ounce, which would meant that you've missed a really cool move. But as we always say, there is no FOMO here. So again, if you do not catch it, it is super okay. Cable, similar vibe. I tend not to look at too many things. So again, cable, yeah, we're trading value low, so it would have definitely been interesting to a lot of people to be long. But again, we're looking at asset correlation as well. If gold is going up and we're seeing the index and a few other assets going lower, then the question remains, where do we stand with cable? We know the pound is traditionally weaker. Again, we shall see. But for me, the major levels that become of interest will be dropping back into bigs around about sort of 120. I can't see a huge amount of buying interest because a lot of the interest was on the sell side. We've got a initiating seller now at V period. So the key is, if we take out the V period high, then we're going to go to a value trade. So it's very similar to the S&P. So there's a high correlation at the moment, which suggests one thing and one thing only, that is there's a lot of dollar strength, but also there's a lot of fear in the marketplace. Hence, we are seeing gold go higher. Right, so people are hedging themselves, right? They're going long the dollar, they're going long the gold. It's a massive safe haven plays, and they're getting out of the risk. I don't think that's going to last, and that's just because we know that from a macro standpoint, we are in a major bull cycle, or at least the beginning of it. And most of the time, the public is most bearish or most fearful when we're at these phases in the cycle. So I do expect that at some point, we're going to get a big move in the indices, and we're going to be very, very high. It's going to be unbelievable for a lot of people. I've made some crazy predictions in my time, but I genuinely believe that in the coming years, we're going to see the S&P over 8,000. And I said it here first, and I will show you guys. I will play this YouTube video for you again when we get to that point. For those who've been following the Discord for years, would remember some of the conversations we had about the S&P going to be hitting 3K, hitting 5K. We had these conversations, and here we are today, seeing a similar event. So sometimes it's just about also having a strong macro perspective, and it's something we talk about. And if you go to Discord server, I've got like a ton of stuff on that anyway. So awesome stuff. So for cable, I'm still relatively bearish, but again, I'm aware of the key statistical levels that we should be paying attention to when we think about natural range. I'm thinking about the 120, 120.62, unless we break higher, in which case you can dink this for a value trade. But the chances that we're going to flow, whoops, that's my bad. The chances that we're going to flow over these sellers is quite slim at the moment. So I would stay relatively bearish. And there's another interesting one, which is Bitcoin. I think with Bitcoin now, major bids at 24, 25. I mean, we said this before. I mean, at the moment, we have pretty much, in my opinion, a pretty solid bid stack here. And that's what we're supporting on now. So if we break under that, just expect us to retest the E period low at the very least. So we end up getting a big fall in Bitcoin. But again, like I said, a lot of the correlation now is pointing towards a stronger dollar, at least pre-US Open. Things might change. And again, you can see that the key level here for us to take out is the 29K level. If that doesn't happen, then we're going to look at much cheaper Bitcoin. But again, where we are in the cycle, we should not be expecting anything too dramatic. We will get some heavy downsides, right? Because we normally do right about now. And it will be a macro event, and it's probably what's going to lead to a lot of excess money printing. Awesome stuff, guys. If you liked all of this that we just covered, I love covering the assets this way using the profile. Again, if you want to know more about the profile, just head to the Discord server. But guys, till my next video, I must say adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?